we are learning from our sources in the Finance Ministry, that the government is not considering any structural changes in capital gains tax. A very significant development, especially in the context of some certain rumors circulating in the market that the government may undertake some structural changes in the capital gains tax. No, it's not happening. Sources are indicating that the structural changes are likely in capital gain tax for individuals and HNIs. In fact, government will preserve the basic framework of long-term and short-term capital gains tax. And of course, the process is on when it comes to undertake some simplification process related to Income Tax Act. As you are aware that the Finance Minister had made an announcement in the last budget to undertake amendments in the Income Tax Act, and that was primarily related with process simplification, language simplification, removal of redundant acts. Draft is ready. We are expecting that the government, the Finance Minister may announce the draft act in the upcoming budget, which could be introduced later in the Parliament. So these are the basic information that we are learning from our sources. Sources are completely denying any such development happening in the government to make structural changes in the capital gains tax framework. Of course, a lot of options are available for the government, but the government will not tweak or tinker the basic structure that will preserve the capital gains tax structure as of now. And of course, what is happening at this point of time is only amendments to the Income Tax Act in order to simplify the process, language, and removal of redundant acts. Back to you.
So Prakash, let's spend some time dissecting this story. There was a rumor and a buzz in the market that the definition of short term and the long term would be changed, and it would come as per the appropriate existing tax slab. What your sources, and these are very senior sources, are telling you that there is no plan whatsoever. So capital gains tax will continue, and it will be parallel to what the current income tax structure is. That's part one of the story, Prakash. Second story, Prakash, what you are saying is that it is highly unlikely that the LTCG, which is called as long-term capital gains tax, and STCG, which is called as short-term capital gain tax, where the rates were increased in the budget, and this time the government had given a budget after they got elected, that rate is also unlikely to be changed. So Prakash, am I interpreting the story in the right manner, the 2 points I just mentioned?
Yeah, of course. And when it comes to long-term capital gains tax, there were some representations which have been made by the industry, especially when there were pre-budget consultations with the Finance Minister, where representatives from the real estate sector have representatives have made their request to the Finance Minister to come out some sort of clarification when it comes to long-term capital gains tax, just in order to give sort of confidence to the real estate investors. Other than that, there is no such proposal or discussion happening at this point of time to make structural changes in the capital gains tax structure. The basic framework will be preserved, what sources are informing, and the government will move ahead with the simplification process if required, but the basic structure will be intact.
Vikas Khemani, was there a fear in the market yesterday that there could be change in taxation and that triggered the market sell-off? I mean, was there an iota of concern in the market yesterday, Vikas?
I really don't think there was much of the expectation of the short-term capital gain, long-term capital gaining change. I think, of course, there are talks about whole Income Tax Act kind of getting redrafted, but at least whatever little, I don't think there was much of the panic based on that. But of course, because I think India, as far as the capital gain tax are concerned, we are reasonably high as compared to across the globe. And last year, government increased, so there's no reason for government to again tinker. We are the unique market where you have both capital gains and STT, which itself is bizarre. I mean, STT was levied when the capital gains were done away with. Capital gains came back and STT remained, and STT collections are like 35 to 40,000 crores. So this is, in my opinion, government. It is absolutely unfair to continue both taxes. So rather, I would say it will be positive if government does away with one of them. Either you take away STT or you take away capital gains. So the expectation of market would be to have one. But anyway, I mean, you can't do much about it. Whatever government does, as long as there's no tinkering in that, it's good.
Sunil, lot of market groups, we call them the WhatsApp group, did have this rumor that income tax would be simplified and the capital gain structure would be merged and you would be taxed as per your current tax slab. At least we learned that fear was misplaced. Is there something which you think was a genuine fear in the market? I mean, the sell-off could be attributed to anything, but this is something which a lot of WhatsApp groups have been attributing to.
Yeah, I think it's basically in the MS related space and where that these groups were circulating. So there was a building fear, but I don't think this came from the government. This was more like self-initiated and a little bit of fear. I don't know whether the selling can be attributed to that, but definitely your clarification that there's no such thing will give a sense of relief. These WhatsApp groups at least will now focus on other things. That's good. So it also indicates that the government is comfortable on the revenue front, so they don't want to tinker there. The second is the government's focus is also on the bottom of the pyramid, which is outside the tax purview. So I think getting money into the hands of the bottom of the pyramid is more important for the government. I think taxation-wise, whatever is there, I don't think they do much. Maybe they might increase the tax slab at the base so that more number of people have more disposable income at their hands. So overall, I think this news is positive to the extent the calming effect. It's not a negative, absence of a negative surprise itself is a positive, I think.
It's a great point. Sometimes no news is good news. That's what we always say. So Vikas, what are markets exactly prepared for from this year's budget? Something big, nothing big, routine budget, or it could be a path-breaking budget? Vikas?
I think, to be honest, there aren't many expectations for the budget, and if you see last 5-7 years, budget expectations have been going down because tax changes happens through GST Council. In direct taxes, a little bit of changes happen. So I think from expectation perspective, this year is definitely that personal income tax will come down. Because I think we have a reasonably high incidence of personal income tax. If that comes out, I think that will be a good outcome. Other than that, I think market will be probably looking for fiscal deficit number and what kind of capex spend government is planning. These are the 2-3 things. Other than that, I don't think budget is any significant event.
The same question to you.
Yeah, for me, I think the more important thing in the budget, I think it's an important budget because this time the balance of the budget is important. I think government has to devote efforts to revenue expenditure and consumption, making sure that goes to the bottom of the pyramid. And whatever developmental capex they do also should be directed towards getting money in the hands of the Aam Janta. So I think that balance, because I think on the revenue side, they will be comfortable, fiscal deficit will be comfortable. The allocation of expenditure between capex and revenue, I think is one of the most important decisions because the relative, the lack of success in the parliamentary election compared to their estimates, and the way Haryana and Maharashtra elections we won with a greater tilt towards populism, and with UP and Bihar elections on the way, I would expect this budget to quietly do a reallocation to more towards the consumption side. And that's something I think domestic institutional investors would definitely be favorably looking, because only with that pick up in the consumption will private sector capex pick up. Because the problem with the Indian economy is not about government spending, though last 2 quarters it has been about that. But overall, government over the years has been spending a lot on capex. But the GDP growth are not going past the 7-8% because private sector capex is not happening. And that's because mass market consumption is not taking capacity utilization up. So I think this budget, if that could trigger that, I think market will keenly watch that. So I would say that it is an important budget from the way the finance minister spends the money or plans to spend the money.
Sunil Subramaniam, thank you very much for joining us.